Hello, and welcome to Urban Hood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co host, Allie, and I'm here with Mushi Buyan. Our mission is helping you gain financial freedom. You're listening to one of our special weekly market talks, which provides news on the upcoming week that may be important to traders. And we're super excited that you're here with us.
Welcome everyone. I am Mushibuyan. Everything I'm sharing, it is educational purpose only. It is educational purpose only. By all means, we are not offering anybody financial advice. Your hard-earning money, learn to protect your money. Next week, what's gonna happen? Nobody knows. Some of you might be looking at say, hey, what stock I should be buying or what stock I should be selling based on the information at your hand. Then you make the decision and we'll share with you some of the information that might be helpful for you.
I just wanted to add something interesting for you guys that I realized this week.
For the market,
Russia has not reduced production or sales of any one barrel of oil or 1 cubic foot of gas. So all these prices are artificial.
absolutely. It's anticipation. It's anticipating. That's why they call them futures. It's not the present, it's the future.
Yes, Sergey. SARK. SARK. I know most of you know ARKK is ETF fund, innovation ETF fund by Kathy.
The reverse one? The reverse of
yep.
What's her name? Kathy Woods?
Yep, reverse that one. Correct. So
they don't reverse any of the Kathy Wood holdings. They are just reversing ARK as ARK inverse itself. They don't inverse. Yeah.
There are.
When you're long SARK, that means you're short ARKK.
Yep.
Yeah.
So basically, it's great for retirement accounts. They can't short. They can at least go long on SARK.
I have a chart that I will show it to you. If you then you'll see what's happening with SARK. But anyway, this is something I know that some folks that I am working with, they have been very happy with getting SARK, and they said, look, let me show you that I've been making very good money. And at the same time, while they have also ARK, they kind of dumped them a while ago. So last week, what happened last week? We know that since Monday to Friday, this is the third week of the war between Ukraine and Russia. And people thought, okay, there was a conversation happened, they will stop bombing, and boom, things head fake happened in the middle on Wednesday, Thursday, Friday. It was just like unexpected. Nobody saw it was coming. Even Putin himself gave us a head fake, and on sometimes on Wednesday or Thursday morning that he had a good conversation, boom, did not work.
Putin is famous for his head fakes.
Right. And then the third thing you all need to look into, like, so what's happening with currently U.S. market. U.S. market, that last CPI data came out last week. CPI gave us a very strong number, but all those who is very follows economics, some of this number might be shock us later on, but still overall it is a good sign that economy is still going on a growth mode. So far, we are on 3 to 4% growth mode this year. So if somebody is looking to invest in foreign market or emerging market versus US market, they do look into this indicator, economic growth indicator overall the country. So US is still, beating, comparing all the other countries around the world. So here is the chart. If you the SARK, what I'm sharing with you, if you look at it, this is just it's a 1 minute chart, about 1 minute, 5 minutes, and short time frame you can put it there. But one thing you can see, the trend is just, if you put it even 15 minutes, you'll see the trend. Last 3 weeks since we had this war, and this ETF is keep going higher and higher. It's beautiful chart. So if somebody is trading that one or looking to see that what's gonna happen and in this current market, and it can get worse, everything we're seeing that still we are not out of the woods yet, you might take a look at SARK. Anyone here is trading SARK, or this is the first time you heard about it?
No, not SARK, but shorting ARC for the last month and a half, and it's been the somewhat of a savior to the account.
Besides you,
No,
anyone else?
Yeah, I took SARK as is, decent returns.
Okay, good. See, we have someone SARK at the decent returns. Those who is following what's happening in Ukraine, that I'm sure that in the media, different media, you are seeing that some of these like it's not good to see what happened, how a country got destroyed and they're getting destroyed and destroyed. But what's gonna happen, nobody knows. But hence that market last week that here highlighted on 17%, you know, the Nasdaq is down since this year happened, and word is in last 3 weeks since January. Last January, it's just getting worse and worse. So and we see every time there is an indication that the market going to go up, tech goes up, and on goes something fear comes, tech goes down. So I know so many people, their portfolio, they're heavy into tech, but by all means know the risk on the both sides. You can make a lot of money, you can lose a lot of money also fast. You know, this is the SPY chart. You can see the last week daily chart is a daily. On daily chart, you see the pretty much since last week, Monday, Tuesday, SPY could not hang on to it. It just stayed at the bottom calc. Trying to find the direction. Is it going to go down, get worse, or it can go above? I think earlier someone mentioned that, you know, watch out this strong indicator. If it doesn't stay above SPY, it has to be around 440 is some of the land 436, 440. We're going to see more downtime this coming week. Now, this oil and gas, we have seen last week what happened whole week. Oil, I have another chart also. You will see that oil came in around 130 and came down, but overall it stayed down. It did not go as big hike it had last week. Where you see the bond also seems like it's 10 years bond, barely it was up. Gas price. I know some of you are seeing this kind of thing in California. Are you guys seeing this kind of price? I know we have a lot of California.
Moshe, no,
Yep.
This is not the average price. This is in very select places in LA.
Like San Francisco, you know, that's the most expensive right now.
Yeah, about 4.5 to 5, I think is.
So it's not everywhere in LA, but San Francisco, because we have seen it on the TV. Bloomberg was showing.
1185 in Beverly Hills, right?
Okay. So one of the things I do not know if you guys follow Larry Summers. He's the professor of Harvard and economic treasury secretary I think during Clinton administration. And he had made a comment, this is the price of freedom. When last week they mentioned they sanctioned the oil import from Russia, and then America, I guess, took a different approach. So when I said they're taking different approach, they are also trying to not only help as much as possible. I think America is looking in the gas and oil export business. So this is new opportunity also coming up.
Yeah.
So this is something that you are going to see, that this is although this coming Wednesday that, you know, Fed is going to come back, there are so many other variables into it.
One thing I want everyone to know, that the crude oil that's coming from Russia only represent 3% of the shipping to US crude. So don't say it is Russia crisis.
No, this is all speculation. And it's actually 10% is the most we buy from Russia, 10% of all of our oil.
Mm-hmm.
It does not represent except 3% of our crude oil. Okay, I have the facts.
I did not know you saw 3%. I saw somewhere even lower than 3%. But it's still all it varies which source you are looking at. But like what you mentioned is true, right? You know, we are not heavily dependent on Russian oil. However, that is different for Europe market. Europe is there 40% of their energy.
They're heavily dependent.
Yep, is coming from Russia. So that's why in the market, US market, since last 3 weeks, we got the war. What happened? US market was dropped 4%, where EU market dropped 12%. Because of that, because there are more and more uncertainty between Russia and Ukraine, and Europe is dependent on their, not only the energy source, there a lot of commodity, they're dependent on Russia. So that kind of waking them up what they need to do. And that's why US is looking into helping Europe and being in the energy export business. Those who is investing in emerging market, that's different discussion, will come back later. But this chart is gives you on the left side what you're looking at, that where crude oil, that you will be, the chart was given by FactSet, that crude oil price versus our inflation. What happened right now? We are 7.9% inflation. So this coming week also, when Fed is going to come back with some of the rate hike that we'll talk later, that how's that tie with it? You saw on Monday till Friday at some point that each barrel of oil, the crude oil, went over 20, 25, and then it dropped. And you see, when any time is gas stays around 120, 140, is correlate with inflation CPI 8%. So it has to be, in order for us to, in this country, that inflation go down, has to be stay below certain number, else they, no matter what Fed does, that they cannot bring it back to within the 2 to 3% inflation, which that's the ideal number they're looking for, CPI. Okay.
Not so quick.
Yeah, ideal.
Yeah, and just another data point to add there, Moshe, is, I put a link in the chat, which is every time there's been a increase of 50% in crude rates, it's always followed by a recession. And here's a kind of a unlucky situation here, right? Where you have the interest rates, you have the oil prices, you have the inflation, all like triple whammy coming in, and this is likely leading to a recession. I think there's a
it could.
Correct. Right. So this is also something that you need to see in coming months, what happens, what Fed does, and other economic data. But what you have seen earlier, that, hey, if Fed decide this coming week that we are going to increase the rate 20 basis point or 50 basis point, or be more aggressive, what do they want to do? You see that worst case scenario, okay, they're going to increase the rate, the probability 50%, they will increase, go more aggressive, go higher, or they'll say, no, we see that other indicators are giving us, based on economic data, labor short, supply chain, everything is getting into the picture. If that's the case, they may not, just increase that point, like 25 point is expected. Market probability is 50%, 20%, 30%. It's the inflation. What they are looking, the market is trading as if it's going to be 25 basis point, and life is good. And hoping by this, if they start going next to autopilot next 7-8 months, then they can bring that is under control 2 to 3%. Else, if they want to go more aggressive, go higher, they want to go this. So based on what we see the last week happen and my economy, we do think, you say it's a 50% chance. This coming ahead, Wednesday is the one that Powell is going to have his whole FOMC meeting, and then his press conference, and there are some more data coming, unemployment data on Thursday, and Friday, this home sales is another critical data that we will see that is this changing or is this progressing this coming week. And what you guys are thinking that this coming week, or what are you hearing that if somebody is saying, should I invest right now, or should I wait or hang on to it, or pull back?
Probably best to wait to figure out what's going to happen.
Yeah, I think it's probably going to be what Powell says after the rate hike, right? I think in the sense of, are they planning aggressive rate hikes, like, if it's going to be 0.5 instead of 0.25 the next time around? All of those things are, I think, things to watch and wait for and see what happens.
Right.
They also, by the way, reduced the GDP numbers for this year, so that's another lovely good news.
Right.
Not good news. So yeah,
there are multiple variables, like you said, the Fed is now working closely to figure out when Biden administration came in and they made a lot of promise they're going to do, and things did not go in their favor. Now they are reshuffling we have this infrastructure bill that passed. Look, we have this $1 trillion are already ready, but now they cannot go start doing the work because of the supply chain problem, and we see that. So, but it has nothing to do Biden or the, let's say, Republican or Democrat. So now they're working closely with the both sides, Democrat and Republican, to find out with the given tools what we have now, what we are facing, and the world nobody expected is going to happen. But consumer, some of this data coming in, economic data still looks strong. So how can we maintain this, stopping this war on Europe just without US getting too much heavily involved? I don't recommend anybody trade on earnings, but any stock that you're looking at February that, hey, if it goes deep more, you might want to take a look at it. Dollar General is one Thursday, FedEx, I know a lot of people, Accenture, I used to be with them in the past,
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.